Good afternoon, everybody, and welcome to our monthly Hot Stock panel, Hot Stocks and Hot Industries. Glad to have you here. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and I'm going to be joined with two of my most esteemed colleagues here in a moment. What do we do here at the Hot Stock panels? Every month we give a theme, and we talk about what stocks are hot, but from several different themes. This month, again, is panels. Last month, what was it? Hot stocks for the dog days of summer. All right, and I haven't checked to see what they look like since then, but I think I'm going to start running a portfolio after every hot stock panel. If you can hear me out there, by all means, please respond in the affirmative, preferably with VV Nation, to let me know that we're coming across loud and clear. Riding side saddle to me is Joey. Put your hand across, Joey. Joe, there it is. Joey, he's my producer. Say hi, Joey.
Hi, Joey.
And again, we're joined by with two of my esteemed colleagues, which we're going to get to in a second. First off, wow, Kobe, did you just put that in a different, is that VV Nation in a different language? I wonder if that is. And if it is, thank you for that. I love that we have a reach all the way around the world. People from all over the world are here today, and that's an awesome thing. If you already are used to the channel, hit the like button right away. Let's get a good foundation of likes going so that the YouTube world will start to stream this video or give people the opportunity to get into this video. So right out of the box, please hit the like button. If you're brand new, please subscribe to the channel if you like the content, all right? And we do this once every month and on YouTube as well, every Thursday at 2 p.m. I do Trending Thursday, where we talk about what stocks are making the news. One of my guests today, Patrick France, does a lot on Facebook. He'll have a presentation at 11 o'clock tomorrow on Facebook, which talks about how to use the VectorVest mobile application. So many of you, if you don't realize, if you are a subscriber to the VectorVest system, you do have access to the VectorVest mobile app. Join Patrick every Thursday at 11 a.m. on Facebook, and he will walk you through how to use the mobile app where you can invest on the go. But biglier than that, hit the like button. Let's get the likes going as quickly as we possibly can. All right, real quick before we get started, I'm going to bring up something for you. We have an awesome new tool called the Profit Locker Pro. Here's a link to the register for a webinar for it. Can they see that? No, they can't. Man, Joey, so slow. You're slow. This is, yeah. So Joey and I fight all the time.
Don't get mad at your caretaker, Glenn.
Wow. Joey and I fight all the time. Here's a link, www. Oh, what is the link? Well, Joey's going to put the link in the chat for you. Profit Locker Pro is a great tool. No matter what platform you invest on, Profit Locker Pro allows you to bring your stocks into this application, and it will let you know what stops that your broker doesn't even have by way of VectorVest. Our stops can be applied to your stocks, and through the app can let you know when it's the right time to sell. Then you go to your broker and sell it. So this is a 60-minute webinar on the tool. Joey put the link in the chat for you. By all means, please check that out. All right, so let's bring up who my guests are today. It's going to be me, Patrick France, and Todd Schaefer. Before they get into what they're going to talk about, they'll tell you a little bit about what they do, and then they're going to get into the stocks that they've picked. And remember, the theme today is industries, and there's three different ways that we're going about it today. Me, I'm going to pick the low-lying fruit. Patrick is going to go a little bit more through industries that are hot. And then Todd is going to be our anchor today. He's going to show you an awesome way to see what industries are moving and shaking. You don't want to miss anyone's presentation. And we saved Todd for last because I think that proves to be one of the most prudent ways to find industries that are moving and shaking and not the industries that are already at the top. How about being able to ride an industry as it starts to move? And those are where you're going to be able to take huge profits and good opportunities on those trades. So 3 different ways to still look at how to use industries, and that's what we're going to do today. And I'm going to start it off in our list in a second. I'm going to start it off by looking at our watch list, and let's get to the viewers tab. I'm going to get you there in a second. All right, well, we got you there now. From our watch list viewer, I already have a hot stocks panel set up for where is it? Oh, 8/31/20. There it is. Oh, nope. 8/31/21. Oh, where did it go, Joey?
I don't know.
8/31/20.
I think you'd label it a little better.
No, 9/20. No, sorry, 9/1/21. Woo! It's 9/1, and I got it set up as Hot Industries. I hate you, Joey.
Hey, move that black couple.
Move my black. Which one? This one?
Yeah.
All right. So here's our list of stocks. Today we're presenting you with 7 stocks. I have 2, Patrick has 3, and Todd has 2 as well. So here's our list of stocks. The first thing I want to do, especially if you're brand new to the system, talk to you about our indicators. What makes us different from everybody else out there? You know, why do you want to spend your time on our hot panels? Because everybody on YouTube has something that talks about what stocks to buy, blah, 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 blah. What makes us different? Well, first of all, when we put our stocks into a watch list that you're looking at right now, these stocks are automatically sorted by our master indicator VST, which stands for value, safety, and timing. So the stocks that have the best combination of value, safety, and timing will automatically migrate to the top of the list, and the stocks that have the worst combination will find themselves at the bottom of the list. We assign a value to every stock so you can quickly discern whether a stock is under or overvalued. Our premise is we rather have you in a stock that's undervalued, that's rising in price in a rising market, so you can quickly discern which stocks are under or overvalued. Then we talk about our master indicators: relative value, relative safety, relative timing, VST, CI. All of these are cast on a scale between 0 and 2, where above 1 is favorable and below 1 is unfavorable. Relative value looks at a stock's long-term upside potential. Its upside potential to outperform the market, and we're going to use a AAA corporate bond to represent the market. Relative safety is an indicator of risk. How risky is the stock? Relative timing, and it also looks at the financial performance behind the stock. Relative timing looks at the stocks. Is it in an uptrend or not? Above 1, it's in an uptrend. The higher above 1 it is, the faster in an uptrend. Below 1 in a downtrend, and the further below down 1, the further the downtrend. And again, our master indicator, which combines relative value, relative safety, and relative timing. CI is what we call the comfort index, and it looks at the stock's ability to go up more than it goes down. That's the layman's terms on CI. Then we look at things like earnings, because earnings is the engine that drives a stock's price higher. Not only earnings, but we want to see if they're growing their earnings. So when I look at these indicators, that's a cursory overview of what they do and what makes us different from everybody else out there. We actually time the market, but when we look at investing in stocks, we want to look at these indicators: upside potential, relative safety or financial performance, an indicator of risk, and if the stock is in an up or down trend. All right, with all of that, let's start off with the 2 stocks that I have. I'm looking at CDNS and I'm looking at TQQQ. Why CDNS? Well, if I scroll over to the right, CDNS is in computer graphics, and it's one of the top 3 industries that we have right now. So the idea is to look at the hottest industries. I went down, the first industry happened to be funeral services. I thought that would have just been a very sad presentation to talk about, well, people are dying, and this is how you make money. Didn't want to do that, but it's true, every day. And, funeral services tend to be at the top of the list a lot of the time because it is an overarching fact that we all are. So, but I went down and I found computer graphics, one of the hottest industries, and I'll talk about TQQQ in a second. All right, what does Cadence Design do? Let's right-click, view the full stock analysis report. Also, very easily in the VectorVest system, we can pull up what a stock is, what a company is. Cadence Design Systems engages in the design and development of integrated circuits and electronic devices. Well, where do we see that? Everywhere. All right, we see that everywhere, whether it's our computer, whether it's our tablets, whether it's our phones, whether it's our watches. Computer analysis or computer integration is part of everything. And that makes sense that right now it's in a rock and roll situation. It produces its products include electronic design automation, software, emulation hardware, and intellectual property, commonly referred to as verification IP and design IP. Very quickly, why is it a hot industry? Well, here's the stocks graph over the last 3 months in our stock analysis report. Look at the industry. Look at the industry. So when we say things like birds of a feather flock together, why do we look at industries? Because if an industry is rising, it means the stocks within the industry are rising as well. And this is just one of a few stocks that are in the industry. So that's what Cadence does. Now, indices within the market, thus the reason I'm looking at the TQQQ. Now, it's an ETF. I like always trying to provide for you some sort of ETF so that in case you don't want to trade on an individual stock, you can look at an ETF to trade the whole space. It's a safer way to play a hot stock. No matter what the theme is, it's a safer way to play the hot stock. So as soon as Joey gives me access to the mouse again, Joey and I share a mouse, I'll get into the graph of these two. So CDNS, we all now know what it does, and of course the TQQQ. I'm going to right click, I'm going to view the stock graph. Now, on my graph, I have it set up pretty simple. I'm looking at a 20-day exponential moving average. I always like to look at a 3-month graph because whether I'm trading for a short-term trade or for a swing trade, I think 3 months gives me more than enough time to make a good solid decision for now. The graph is moving from the bottom left to the top right. Nice 45-degree angle. Good opportunities to get in when the stock's price is above the 20-day exponential moving average. And then when it's below, take your profits. Don't give it all back because on this pullback, how do we know how low that's going to go? We don't know. All right. So a good opportunity to take your money out. Bounces back up against the 20-day again. Now I'm getting in higher than here, but lower than here. The whole idea is to buy low and sell high. Well, where is low, where is high is in respect to where the stock's price goes after you buy it. So nice bounce back up above the 20-day. Look at the move, still above it. Volume's pretty steady. I also have a technical indicator, MACD. Like the crossover right here. Look at this. Crossover where the stock's price went above the 20-day exponential moving average. A couple of days, if you want more confirmation, boom, there's your confirmation. The MACD went positive, crossed over. That gives you more accurate confirmation of getting in. And wow, stock's price is looking still moving up. A little bit of a doji today, but where is it at? At a new 3-month all-time high. And the MACD is getting stronger, now starting to level out. And Patrick's going to talk a little bit about that when he comes up in a second about some of the industries that possibly are showing some sense of a bearish divergence. And he's going to get you prepared nonetheless. So I like what all three of us are bringing to the table today. 3 different perspectives on looking at hot industries. So before I get into the next stock, you guys got anything you want to say about it while I drink my Cafe Bustelo? Can you have some what? I don't know. You don't want to eat that. Oh, okay. Eating it. Go ahead. Sorry about that. Joey's eating stale gum in my office. They're pretty stale. He might pass out or something. So just, oh well. Go ahead. Go ahead, Patrick.
So the only thing I see is yesterday's candle and looking at that volume. Just, as we know, volume is conviction. It's a good place to start by looking at big spikes in volume. So seeing yesterday, I'd be cautious and wait for today's price action to see if we get confirmation of a potential downward move, or if it gets invalidated basically by moving higher. So that's the only thing I see that's cause for concern. Everything else looks pretty good though.
All right.
Yeah, I'm similar. If you put on the 20 EMA, I think you have a 10 on there right now.
I should have. Where is? Oh, it's a 10 EMA. Where's my 20? There it is. All right. There's my 20 EMA. 20 is going to look even better.
Yeah, but if you take off the 10, it gets it out of the way, and you can see it a little overextended, and that kind of jives with Patrick's comments on the volume. So be careful here. Just make sure that if it does stall or pull back a little bit, that you have a nice strong move higher, taking out yesterday's high.
So let's give some insight on, if you're not in it now, what to look for. I'd look for higher than yesterday's high, 164.66. It is higher than yesterday's high. Intraday, I'd look to be higher than today's high, which is 165.63. If the stock does decide to pull back, I'm now looking at a 20 EMA. I'm going to go back to the 10. Going to go back to the 10, especially as Todd is right, as it's pulling so far away from the 20. I'd use the 10. I'd use the 10. If the stock's price falls below the 10 EMA, I'd probably think about cutting my ties with it, as it's worked a couple of times in the past. But I'm going to stick. I thought it was a 20 EMA, but it's a 10. I like the 10 better than the 20. But I would look. It is higher than yesterday's close. 163.48. Yeah, it's higher than yesterday's close. I'd want some more confirmation going higher than today's high.
Well, you also have some price congestion there at kind of the 50% pullback, a little bit north of that probably. But in other words, that could be a nice little weak support level for you, which is a little deeper than your 10, but I think better than the 20.
All right,
at least for your setup.
Let's see if I can get that there. You talk about right about here.
Yeah.
There you go. And you just took away my daily. Sigh. Right about here, which gives me a price of about 157.62. I like that as another good level of consolidation, but still pulling higher. Which one was I'm not there yet. All right, so that's the insight on that one. Now, here's my ETF, which is the TQQQ. Now, when I was looking at the top industries, 3 out of the 5 happen to have been in the tech industry. So I think that a good space to be, without having to pick and choose a specific industry, is to look at the TQQ as a whole. Bottom left, top right, little consolidation period here. Moving averages are not useful if a stock is moving sideways, but when it's trending up or trending down. Most recently, the stock's price, this is still the 10-day EMA. The stock's price went above the 10 there. It wasn't until the 25th that we got confirmation with the MACD. Price was above the 10-day exponential moving average MACD cross. Stock's price pulled back, but look at that 10-day exponential moving average holding in tight. The stock is still, or the ETF is still hitting a new 3-month high. All of the major indices are still hitting all-time new highs. Most recently, the market is still going higher. It is what it is. Nice little update today. And yesterday, look at the last 3 days prior to today. Volume's been pretty steady. All right, so it's going up, steady volume. It is have some good conviction behind it. Up day. We got a lot of trading days still left, but the MACD not only is crossed, it's getting stronger. So it's showing some direction. So if I'm thinking about getting into here, I'd go 12 cents higher than today's high. The high today is at, The high today is at 152.82. I'd go 12 cents higher than that, but definitely bottom left, top right, nice open candle, very little wick at the top showing me any selling pressure, a ton of selling pressure, but definitely moving higher. Patrick?
I mean, with ETFs, just the only thing to focus on is RT and timing. So as long as the timing or RT stays above 1, it tells you to stay into it.
All right. Todd?
Yeah, I like the price structure a little bit better on this one, right? We have the stronger candle. You're still above the midpoint, a little bit off the highs, but just as an example of what we're looking for, or what I'm looking for on that other the other stock chart, that's the better entry, right? We're off the doji. You've got some strength behind the move, and it's similar. Yeah, to your point, I think where you're going with that on the Qs, you got that little pivot again, giving some weak support, actually stronger support because you have those prior swing highs. So it's a nice little support level for the setup on that trade. Again, you're on the 10-day, which it's a momentum trade, right? So you're extending from the 20, but good pick.
Awesome.
And so, Glenn, as a side note, though, before we move on, if somebody isn't comfortable with the 3-time leverage on the NASDAQ, what are some other options they could do if they wanted to, follow the same trend, but not necessarily have as much leverage to it?
I think the Q did 3Q, but I think that this looks at the top 100. Not
So
even
does T triple Q.
Huh? Yeah, the tree
So does
tip.
T triple Q.
That's the one I was looking at.
Yeah, the NASDAQ 100. I was going to say QLD would also be another opportunity if you wanted to have 2 times leverage instead of 3 times leverage.
I was
That way
trying to
you
come
still-
up with the 1-time leverage. This is 2-time leverage. The TQQQ is 3 times leverage. What is the non-leverage? Either one of you know?
QID
Is it QID?
I have to cheat, and I don't have
or
my sheet
QLD
open.
maybe.
Q-
Yeah, QLD.
QLD.
QID is the inverse.
There we go. So now there's 3. Yeah, is already in the list. All right, so it's 3 different ways to play the Qs. QLD, non-leverage ETF. All right, moves 1-to-1. Still scenario, same scenario above the 10. MACD rising. Then we've got the triple Qs, which is 3 times leverage, same scenario above the 10. MACD rising. And then you have the... This is not non-leverage.
Wait, QLD is the double. QQQ is just the non-leverage.
All right, so the QQQ is the non-leverage. All 3
Yeah.
representing the same scenario, but 3 different ways to get in. The T triple Q is the more aggressive way. As quickly as it goes up, as quickly as it goes down. Maybe QQQ or QLD is another alternative to go. All right. So now, I give Patrick the dealie. And again, Patrick's going to take this to a different level of what to look for in this hot industry scenario. Patrick, tell them who you are. Take it away, man.
All right. Welcome, everybody. Thank you for having me today. My name is Patrick France. I'm a senior instructor here at VectorVest. A lot of people refer to me as the mobile man because I do our live stream every Thursday over on our Facebook page and also here on our YouTube channel, talking about the mobile app, showing you new features, functionalities, tips, tricks, how to trade. So if you're interested in that, make sure to like and subscribe to our channel if you haven't already. Turn on notifications and join us every Thursday at 11 a.m. Eastern. Today, I've got a few different candidates here. I was looking at and talking to Glenn earlier this morning about some ideas and looking at the overall market as a whole. And one of the things that I was noticing is when I was getting into the Unisearch tool, let me go ahead and get in here real fast. And then in the Unisearch tool, I was looking at the Delta Searches Industries, and I was looking primarily the 13-week price deltas. So one of the things I noticed here when I was going through the graphs of all these is that if we just go pull that up and just add on RT here at the bottom and zoom out, let's go to a 1 year. This is going to look a little crazy, but a lot of the graphs that I was going through when I was looking at it on the overall industries, RT has actually been hitting lower highs over the last 6 months as price was moving higher. And as we scroll through, I was going through that and I noticed that similar pattern throughout a lot of them here. So as a side note, take everything with a grain of salt, be careful out there. And I was going to do some potential short candidates from some of these bearish divergence industries. I decided to hold off for today just because we were wanting to go with more of a long bullish theme. But I did want to point that out to highlight what Glenn was mentioning just a moment ago. So with that, let's go ahead, jump back into the watch list, and we'll take a look at some of the picks that I have for you guys today. So my picks are going to be coming from Mara, which is a crypto adjacent, if you will, stock. If you're not familiar with it, it trades pretty much in tandem with how the crypto markets are doing. Over the last 13 weeks, it's actually the second highest or fastest moving industry based off of price action. So obviously wanted to go within the top 5, top 10, as close as I could possibly get. So Mara is going to be my first one. Looking at it here, it has great long-term potential, does have a little bit more risk than the average stock out there, really good short-term momentum. So for you traders out there, could definitely be a great opportunity for you. My second one is going to be CAMT. This one comes from the top 4 industries, scientific instruments, I believe it is. Let me just double check that here. Yeah, Instruments Scientific. So it's been one of the hottest industries over the last 13 weeks. So therefore, I chose that one as well to add to our list. As we can see right now, it's basically fairly valued, has great long-term potential, less risk involved with this stock, decent steady uptrend. So yeah, obviously the stock's a good play. This would be a more prudent one. This one would be more of an aggressive play with Mara. And then my last pick we're going to look at here today is GameStop. If anybody is new to the channel or if you've been with us for a while, you will know I do a lot of content on a weekly basis on GameStop. It's one of my favorite stocks that I've been watching. I think Glenn's trying to interject here. And so I was going through the industries. Glenn told me not to add it because we're looking at hot industries. Well, here's how I found this. It actually does match up with today's theme. So what I was looking at is the one-day price deltas on the industries. And then when this comes up, you have number 6. Where was it? I have to change the date. Excuse me. I was looking at this last night. Let me change the date. Will you guys change it to yesterday's date?
Yep. Hold on.
One moment while I have Glenn's caretaker set that up for me real quick.
Wow, really? Really?
I'll run the search here. So this is going to look at the biggest one-day change in all the industries out there as of yesterday's close. Once it pulls up the results, so you have a lot of data it's having to calculate to come up with these numbers. So we just got to be patient for a second, let it crunch the numbers for us, and then we'll have it coming up any second now.
It's Patrick's fault.
There we go. And here in the space we have, where's retail consumer elect. So number 6, still within the top 10 on the one-day hottest industries. If I would go here and view the stocks in the industry group, need you guys bring that over? There we go. So once I had this, I then changed the sort to one of our favorite sorts here at VectorVest. And any moment now when I get that pulled up. And that is going to be RS times CI. So this is a combination of relative safety, which is the fundamental indicator. It's looking at the safety or the risk involved with any stock. And then CI is more of a technical indicator that looks at the snapback factor, if you will. So stocks with a higher CI, if they have pullbacks, tend to rebound and hit new highs very quickly right afterwards. Let me go ahead and find it. That's RT, not what I'm looking for. RS times CI. So I'm going to go ahead and say OK. And GameStop came up as the highest RSCI stock in this list from the top 10 hottest industries as of yesterday's close. So found a way to get it added into the list. All right, so now you guys have a little insight on how I came up with some of these picks. Let's go ahead and take a look at the graph of them real quick. Going back into the viewers. Highlight the 3 of them. And then we'll go ahead, pull up the graphs here. Have to change Glenn's layout that has a million different indicators on it real quickly.
Yeah, you need to stop being a hater.
All right, so first stock is Mara. Let's go ahead and put it on a 6-month time frame. Take off some of these lines. And so Mara had a great run coming into April. We've saw the sell-off, which crypto took a pretty big hit from that point. Bitcoin hit, I believe it was close to 60,000, pulled back down to right below 30,000. Ethereum, which is one of my newer favorite cryptos to follow, went from somewhere in the 40s down to the somewhere high 4,500 down to the low 2,000s. But then they've started recovering, and Mara has taken advantage of that here. So if you're not comfortable with trading crypto or not familiar with how to get into crypto, but you want to take advantage of that space, this is a great opportunity to do so. If we put on the earnings per share is steadily rising here. You have a nice new uptrend starting to form. So therefore, this is our first pick that I wanted to bring to the table because it was in the second hottest industry over the last 13 weeks as well. So your guys' feedback?
I'll start. Crypto is a hot space when it's hot, and it's a sucky space when it ain't. Right now, it's a hot space because more people are getting behind it. More people are getting to take it as payment. If you watch Trending Thursday tomorrow, PayPal, it's a whole different story. PayPal is looking to come up with their own platform for investing in stocks, but NFTs, everything in the crypto space is starting to pop. And my only thing, this is my only thing. There's a hammer formation, stocks prices going up. A good way to gauge, what to do with this stock is I would use that trend line. That's a great spot because, like I said, when it's hot, it's hot. When it's not, it's not. Patrick's not using any moving averages, which is fine. But I would use a trend line to watch this stock. And even when it pulled back here, it pulled back to a level of support. And move your mouse for a second. Thank you. It pulled back to a level of support and stayed above the trend line. That was double beauty right there. I'm going to call that DB, double beauty. I like that. And it's still moving up. All right, still moving up. It is in overbought territory. It's all right. I use indicators like MACD and stochastics as heads-up indicators, but price action is definitely moving higher. And not only is it hitting higher lows, coming off of there, it's starting to hit higher highs. Ooh, look at that, Patrick. I didn't see that until just now. That's a little. I'm not going to call that a wedge. I'll let Todd talk about that. I think that's an ascending wedge or ascending channel, some kind of something like that. But it is something ascending. So I like it.
You'll go with you on the ascending wedge. This trade hit my scans too. The only thing I would add is I picked up some resistance at about 45. That's still a 10% move, but come up with a plan of what you want to do if that resistance holds. But other than that, I like the trade too.
All right. And I see the 45 from back here as a good level of resistance, current level, good level of resistance now. Stock's got some good upside. Good pick, Patrick.
Thank you. All right, let's get into the next one. Which one is it going to be?
Should have access. It's not
stuck on us.
You just want to click that?
I guess so, yeah. There you go.
All right, there we go. So CAMT, Instrument Scientific, once again, it was, I believe, number 4 out of the top highest industries over the last quarter, so 13-week delta there. Looking at it, though, you have a nice steady rise in price, bottom left to upper right. Earnings steadily rising, bottom left to upper right. You know, the textbook vector best play, if you will. It's a prudent stock. The company is making money. They're growing their earnings. Not a whole lot of volatility aside from, you know, the little dip they had back in May. But, you know, higher highs, higher lows tends to lead to more higher highs and higher lows. So a very simplistic play, but, you know, hot industry, hot stock, good performer, good fundamentals. You know, just an overall steady, consistent performer that can help reduce that amount of, you know, risk or that that uncertainty most people have when getting into a stock, worried about, you know, is this stock going to pop or drop 10%, 20% overnight? This one is not one of those. It has that higher sleep factor, as I like to call it, the higher RS, which basically allows you to know that, you know, you're in good hands, you're in a good stock, and you can sleep well. You know, even if you went away for a while, came back, most likely the probabilities are in your favor that this stock will be a lot higher by the time you came back without ever even paying attention to it. So that's where I got the second one here, CAMT.
All right. I'm gonna disagree. I like the pick. Bottom left, top right. I'm gonna disagree with the lack of volatility. This one exudes more characteristics of a Glenism, of jagosity. When we've looked at the first couple of stocks, a lot more smoother in the pattern. Nonetheless, this stock is moving higher. But it does have more. If you put a moving average on this stock would get you out a lot more than the other stocks that we've looked at. All right, so that's the only disagreement I have with you. I think it's a little bit more choppy than some of the stocks that we've looked at already. But bottom left, top right, and the DPO is showing the same thing, showing that little bit of choppiness. I still like the stock. I'd like to see it take out that 3-month high, 6-month high. It's pulled back, and no matter what, when we talk about a stock to consider, always consider what's going on in the market and always consider what's going on with the stock. But until I still like the pick from the bottom left to the top right, just a little bit more choppy than the stocks that we've looked at so far this morning. Todd?
Yeah, so Patrick, go to 1 year if you would and put on earnings.
Alrighty.
So while Patrick's doing that, the graph on the left side, smooth, steady, right? And then
Right.
as Glenn's point, right side of the graph has jagosity. But look what the earnings has been doing over that same time frame, right? So the engine is in fine running tune here, driving that price higher. It has had higher volatility swings, and in particular, in this most recent cycle, we've been risk on, risk off, it seems every other week, right? The market's really trying to figure out whether there's any growth left in the cycle or whether we need to become defensive. And it depends on who you listen to that day to make that decision. In that regard, then, I like currently in the market where I can make entries that have nice risk control setups. So let's add support resistance to the graph.
You want to do that, Patrick, or you want me to?
Sure, I can do it.
Gotcha.
Since I'm one of the few here that knows how to use computer.
Respect your
Not towards you, Todd. That was more towards just Glenn.
I don't like the stock as much. So let's go to 3 months.
There you go.
So you're picking up that double top, right? And that sets us up in the channel that we've been in. Go to 3 months, if you would.
Alrighty.
So we get the breakout, and we've pulled back now for the retest of that resistance, which is now support. So on my entry, I'm waiting for the breakout here, right? Let this pullback kind of play out, and my entry is cleaner if I go to the new high, but the setup is nice in that I can control the risk coming into the trade. So once I get that break, then I can take that pivot low as my
entry,
as my exit point, my stop loss, and have nice control over the price action and see if we can't get a nice leg up. If you look at that price leading into this most recent high, look at the acceleration of that over those 5 sessions. Give me a piece of that, please. All right, this is hot stocks. Yes.
And actually, a couple of things happened. Bounced off support, a little bit of a hammer, and look at that stock's price go.
So retest of support right now, that's the thing you were talking about, managing your risk on a trade. I like what we see here with this personally. I mean, I'm a little bit more aggressive for the most part. So I like that it's pulling back, because if you got in, yes, you're assuming more risk right now because it is pulling back, but you have a lower line in the sand, which you could use that stop line or that support line there. So you have a minimal downside, but if it rebounds off of that, retest support, rebounds off of that, you have more capital appreciation basically to the upside with very minimal downside risk. So, you're risking 30 cents a share for a retest of the highs of a couple of bucks. So I like that risk to reward profile personally. So that's why, from a more aggressive standpoint on a prudent stock, I still like where we're looking at right now.
Well, and I know coming to the table that Patrick is the more aggressive of the three of us. So I understand his pick. So I just gave my 2 cents on it. I still like the pick. Like he had it on the 6-month graph. I still like the pick. It's just a little bit more jagged. All right. Your last pick, my friend.
All right. Last pick for the day, or for me at least.
You see, one. I've done video. I did a video on it, and I've got it labeled, and I do have the fib retracements on it. But yeah, it's a meme stock.
That's fine. That works. All right, so last pick of the day, GameStop. Anybody who's part of our Jockey Club knows I did take a position in our Jockey Club yesterday on it. Had an entry about 215. Looking at the stock, yes, it's in a hot industry as of yesterday's close. It's the highest in the industry based off RS times CI. So it has, some of the best opportunities or best fundamentals out of that industry that it's in. Looking at it from a technical perspective, I've talked about this for months now in a lot of the videos. GameStop is in clearly a cycle that we've been in for really since a run up in January. There's a lot of theories on why the cycle is the way it is, but it seems to consistently repeat itself. And you have, level of resistance right around 350. You've had an explosive move here up to 350, pulled back down to 160, had another explosive move to 160, pulling back. And so now you're on the third cycle, pretty much matches right in line with what we've seen over the last 9 months or so. Let's say it's trading at 217 right now. If you're looking for a short-term trading opportunity, getting in now, looking for that target of 300 to 350, 50% gain. I like that possibility. I like the probability behind it as well, doing a lot of research into it. But then on a short-term basis, you had that big blast off here just last week, pulled back a little bit, and now is starting to retest that point and trying to break out of that level of resistance right around 222. So that's why, from a short-term perspective, you have a potential breakout. You have a price target of around 350 from consistent moves over the last year or over the last 9 months or 8 months, I guess, at this point. Earnings starting to pick up on a short-term basis as well. You have momentum starting to pick up. So this is my final pick. A little bit more speculative, I get it. But if anybody is familiar with me, I like this stock. So I had to get it in here somehow.
Let me start off. We all know that it's a meme stock. For those of you who don't know what a meme stock is, a stock that's been made popular by way of the internet. You see this level, and it did it before. See this level, this 222.75, and the stock's having a hard time staying above it. Patrick and I both think it's manipulation. That's all we're going to say about it. I'm not going to jump deeper into it. It is a meme stock. It is overshorted. He likes GME. I like AMC. I hold positions in both of them. All right. So when we look at this, a lot of times it's what's in the news today and what rules are out there in regards to holding people accountable for overshorting a stock. So with that being said, you see that level, and it's pointing you and smacking you right in the face. Something's happened to keeping that stock where it is, especially knowing that it's overshorted the way it is. It is a meme stock. It's a speculative play. Patrick's right on point with it. And I told Patrick if he put GME in this, I was going to shut him down on the panel. He found a way to get the stock into the panel. I couldn't argue with what he did, but I was so ready to say, oh, hell no, you're not putting that in today's panel. But he convinced me of such. He did. He convinced me. And I was like, all right, I can't argue the logic. So
on that, one other note that I forgot to mention, with this trade, if you're looking at it as a short-term, the squeeze play, if you will, getting in now, looking for an exit around 300 to 350. If you want to try to hold on for more than that to see if, we finally break that cycle, by all means, that point comes up to you. But, from a short-term trade, it looks pretty consistent following the patterns that we've had since January, where getting in now, you have about a 50% target to easily make some decent returns right there in a very short period of time. Because when these trades start to run, as you can see back in March, right here, the March run-up, you had a gap up, pulled back a little bit, and then created a very similar pattern to what we're seeing right here, just on a different scale. So when this thing starts running, it runs quickly. So that is my guidance on it. If you do decide to take this trade, look for, a target of around 300 to 350 to start tightening up your stops. But if you want to stick around, hoping it breaks that cycle this time around, that decision comes down to you. So that's the last little tip on this one for it.
Todd, any feedback? I know you're older.
For me, this is purely a technical trade.
Okay.
Look for the breakout on a pop in volume. If I get it, okay, I'll play it up to that resistance level.
Okay.
But Patrick, you're going to become the GME guy, just like Glenn is the Apple guy.
I'm the Apple AMC guy now. Woo-wee. So, but more so the Apple guy. I am.
It's funny he's the Apple guy and doesn't even know how to use his Apple products.
Whatever. Here's another one of these.
If he can't tell Siri how to do something or tell Siri to do something for him, he just doesn't know how to use it.
Sigh. I'm going to come over and I'm going to fight you. All right. Before before I bring Todd on, a couple of things. One, about our Profit Locker Pro app. I definitely would like to invite you to a presentation that we have on the Profit Locker Pro app. Again, no matter what trading platform you use, you tie your stocks into this app. And VectorVest will let you know when it's time to close a position. Especially if you are out there thinking that the broker looks at your trades and manipulates the market compared on what your trades are. This takes all of that out of the equation. You put your stocks into the Profit Locker Pro, your broker doesn't see your stops. All right, and when the VectorVest Profit Locker Pro tells you to get out, you just simply go over to your broker's account, pull the trigger, get out. And again, no matter what broker you use, you can import your stocks into the Profit Locker Pro, and it will send you an alert when it's okay to close the position based upon how you want to trade the stock. All right, and for all of the people who have signed up or what's the word I'm looking for? Subscribe to the channel. It seems like there's a lot of people today. Thank you very, very much for that. And I'm looking at, we're holding on to a lot of people this morning in regards, even though it was an abnormal time for us. If you haven't already, please hit the like button, especially if you like the content that we're bringing. These are ideas that of stocks that you may not know about, and they could be gems in the rough. And as Todd gets ready to take you into a different perspective of it, he's going to showcase the power of what the VectorVest system can do for you in regards to finding stocks that are on the move before they hit the news, folks. And that's important. VectorVest gives you a point where you're ahead of the curve, and Todd is going to show you just how to do that. Todd, introduce who you are. Take it away, my friend.
All right. My name is Todd Schaefer. I'm the manager of research for VectorVest, and I work closely with Steve, doing a lot of trade system design as well as monitoring and maintaining some of the systems within the program itself. So we've been doing this, wow, it's 14 years now, 15 years, something like that. So it's been a little while, but I'm all about process. And so as part of my presentation here, and we'll have to do this kind of in fourth gear, I want to show you a little bit of my process, because ultimately, if we take a look at a market timing graph, there's a nice little lag going on here. Maybe. What we find is that industries and sectors, the leadership changes when you see market clearing kind of pullbacks, right? So corrections in particular, but even substantial pullbacks, you'll see new leadership coming to the fore off of the lows. So that's often where we see the industry and sector rotation happening. But even within any extended market, you'll see as the market trend matures, you'll see rotation within the sectors and the industries. So the concept here is, if you can identify the industries and sectors that are coming into favor, that are advancing, then you can find stocks within those industries and sectors and improve your odds. Well, the best evidence that the industry or sector is coming into favor is that its price starts rising as money starts pouring into the stocks that are in those industries and sectors. Make sense? So the key here is, well, if you look for that time frame, do you go this near term, like a little 10-day bump here, or do I need to look at something more like a quarter, like Patrick just did, or should I look at a year over year? Well, of course, trend duration matters, because the short-term trend, even though the market may have been in downtrend at the turn, right, the short-term trend will be the one I want to look at to identify what's coming up off of those lows. But in a situation where the market has been trending for a while, this may show me new leadership, but if I have an industry that was in downtrend, maybe not so much. And I think I can illustrate that fairly well here. So I'm going to go back to the Delta Searches Industries box, and let's go to the 10-day price delta. So delta is simply percentage change of the underlying. So here we're looking at the average price of the industry, which means that the lower priced industry, the industry that has the lower average price, has an easier time of making a big percentage move. So there's a bias here toward lower priced average industries. That being said, however, if I run that search on today's data, what I'd have you look at is this RT ranking. So instead of just the top RT industry has a ranking of number 1. There are 221 industries, so the worst has the ranking of 221. Well, look how deep in the pile a lot of these industries are, meaning that over the last 10 days, these low-ranked industries have been making the best advances in their average price. These are the guys that are moving. We call them the movers and the shakers because they're below the radar. You don't necessarily see that they're in new leadership positions yet because they haven't gotten there yet. And there's nothing to say that they will. We just know that within the last 10 days, they've been making the strongest moves. So if I graph these guys and take off some of this stuff, let's just look at the price. What you'll see is I'm on a 10-day delta. So this is the 10 days. Right? And so you'll see universally that the top performers here have great 10-day price appreciation. But on a trend basis, they're not necessarily an uptrend. So depending on your objective, if you're doing something that's longer term and you'd like more consistent performance over time, the 10-day gets you great performance in that time frame, not so much as you go deeper into the graph. So what happens if instead of the 10-day price delta, I go to the 13-week price delta? So now I'm looking at the best price gains over the last 13 weeks for these industries. And if I take a look at their graphs again here, now I'm in this 3-month time frame, right? Backing it up to the 1 year. Now I'm looking at something much deeper. And do you notice a difference in the nature, if you will, of those graphs? As I look at the raw data points, I have a lot fewer kind of deep in the pile kinds of industries, although I do have a lot that are well outside the top 10 or 20. I also notice that I have some that are not in uptrend necessarily by virtue of their RT ranking or score. So I can also filter this box by saying, well, let's look for industries whose RT value is above 1. In doing that, I eliminate from the list. I still am looking at the best performers over 13 weeks, but I'm eliminating anyone whose RT analysis says it's still in downtrend, weakening or not. So now I'm looking at the graphs of the industry, and the idea is the steadily rising industry, particularly over the last quarter now, this is more cyclical approach. The industry is in uptrend over the last quarter. And particularly as we see market volatility in this risk-on, risk-off scenario, the longer-term look is my favorite approach to reading the signals of where the market's headed. So in that vein, then it's a simple matter of taking these top industries, right-click, and let's take a look at the stocks in the industry. And you might need to drag that over for me, I guess.
I'm working on it. Be patient.
Thank you.
Boomer program.
You're amazing, Glenn. I don't care what Patrick says. So in this list, then, the things I like to cherry pick for, in particular, are average volumes. I have to scroll over here a little bit. All right, so I have very weak volume here on IEHC, so I'm going to just highlight the higher volumes.
The most impatient person in the office.
Stop talking and let Todd finish. He's got until 12 o'clock.
And now I'm looking at the stock graph. VST sort, typically you're looking at industries that don't have 100 stocks in them, so that sort is typically enough. And so SITM is my best candidate here and the one that made the list for me. And what I do is the same thing that we show in the hot stock pick panel, or the hot stock pick thing we do every night in the daily color guard. I look at RT, I look at earnings, and I look at volume on a 3-month window. Once I like the pattern, let's add support and resistance. I do that just because it's really easy and it just flashes up, so I know whether or not to even be worried about it. I like the pattern in the time frame. Earnings is rising in the 3 months. The only thing I don't like is RT is flat overall, or at least in this near term. But why is that? Well, because the price gapped and it consolidated after the gap and is now playing on that upper resistance. Let's go back, zoom out, look left to see if you have any more resistance coming. No. So at the 3-month look, I take a horizontal line. I think I take a horizontal line. Where's price right now? Right at this little resistance level. So this is a situation where, again, we talked about this a bunch of times. I'm looking for the breakout with some conviction and some volume behind it. But this is the better setup than my second choice, which I'll show you here just quickly. But I have a pivot because we're in that sideways price action that helps me manage that risk. I like that a little bit better than Amphenol, which became my second pick. Simply because it has some topping behavior here and is in pullback mode. But again, a great pick. Its RT performance a little bit better. It's just on pullback mode. I'd have to wait on a setup basis. I'm probably waiting a little bit longer for this to finish its pullback before it makes its next advance. All right, so let's talk about SITM because that was my official pick. Anything you guys want to add?
What I do want to say is I'm going to give an applause for this because I don't think a lot of people in the room realize that with the system, you can do what you just did to find the industries before they become hot industries and what to look for to see what's hot and what's not, rather than just taking a cursory look of, oh, here's the industry viewer by RT. I loved what you did, and I think for everybody who stayed here for this from the beginning, this was well worth. And again, I like the 3 different ways that we attacked the industry perspective. So stock sitting at resistance. That's all I got to say about SITM. I'd like to see it break above.
Me too.
Okay. Patrick?
I'm in the same boat as you guys. It's had a great run, taking a little bit of a consolidation break right now, just, moving sideways after that big gap up. Need to see the breakout for confirmation of it.
Excellent.
And the reason I even hang with it, right, is because the industry is doing really well. And so I'm looking for performers within that top performing industry. All right, quickly then on our last approach, I'm just going to do it right within stock or within the Unisearch tool. Instead of looking for an industry price delta, I'm going to look for an industry RT delta.
And that can only be found in the VectorVest software.
Absolutely. Now, you do have this search already built over here, but I'm going to use that same RT idea of greater than 1. So now I'm looking for a change in the RT value, not in the price, right? I'm neutralizing for price. However, a change of 0.1 delta to 0.2, right, is a bigger increase than 1 to 1.5, right? So there's still bias in the numbers here, but if you take a look at the search results, you can choose your poison. Our RT rankings, and by the way, another way to slice this apple is look for stuff that's still in the top 10 that's continuing to accelerate. Another great approach you can do here. Patrick fell into the crypto stock.
Absolutely.
Group, so I fell into the software group because I really didn't like anything in crypto besides Mara. So off I go into the
I'm working on it.
Industry group that come up.
There you go. Oh man. There it is.
Adobe was my pick. It's at the top of the list, right? So you can look at the numbers here. Of course, one of its strengths is it does pay a dividend, doesn't it? No, it doesn't. I'm sorry. I lied to you. I was thinking it did.
Liar.
It's stronger RVRS scores here, though. Growth rate's a little bit lower, right? So slower growth stock. But if you take a look at its chart, after all, we do trade the charts, still has a good RT score, meaning it's still appreciating nicely. Again, RT flattening over this time frame where price has slowed a little bit, but this is better in trend. You could throw on a moving average there if you like. Again, rising earnings, volumes steady. And there's the 1 year look.
I like that pick too. Look at that earnings. Look at that earnings. That's a thing of beauty right there. That earnings sure does look pretty. That's the Southern coming out of me. All righty then, Patrick.
So one of the things I just am a little concerned for on Adobe, yes, it's had a phenomenal run. Go back to that 6 month, I think you're on.
Was on the 1 year.
Or 1 year?
Mm-hmm.
Look at that accelerated run it's had ever since, the middle of June?
Yep.
Are you nervous at all about it being overextended by this point? Or what's your thoughts on that, Todd?
Well, for that, I can do something as easy as just add a moving average because I like the visual.
Mm-hmm.
Oh, I'm sorry. Go ahead. You got it. Go ahead.
Do I? All right. Trying to add the moving average. I like a 20 for my swing trading efforts. So we see this little slowdown, the retest of that 20 with an advance off of it. How far down does it go? Well, yeah, sorry, you're going to do a fib retracement here and you get somewhere in the middle of the run. Could be as low as here. But I've got some price structure that I can play with, right? I've got this pullback or even this weak pullback here so that I can, again, or even the moving average, I can use that to mitigate risk.
All right. I like all of the picks that we had for today. Put all three of us back on. Todd, thank you for that insight on an awesome way, and I think it's overlooked. You're really good at it. I'm not nearly as good at it as you are in that whole movers and shakers thing. I love that you were able to present that there for people today to find stocks prior. And, a lot of times you find the stocks that make the news, but the way that Todd's doing it can get you into those stocks before it makes the news and gets more people into the stock. All right, so a couple of things.
The only thing I would add, Glenn, is that you can also use the Unisearch to find at the stock level stocks that are in those moving industries and sectors.
Absolutely. So you used it to find the industries that are moving and then turned around and found the stocks and easily from the Unisearch tool without having to click a whole bunch of buttons. Right?
Yes, sir.
Okay. Wow. It's like pulling freaking teeth sometimes. Sometimes you want to talk and sometimes you want to be crickety. All right. The big thing is, again, for all of those people who signed up and subscribed to the channel, thank you. To answer Carol's question about does the Profit Locker Pro link up to TD Ameritrade? The Profit Locker Pro doesn't actually link up to anybody. You can import your stocks. I want everybody to know that. You can import your stocks into the Profit Locker Pro. I recently just did a video on it. I think we put it out. I recently did a video on how easy it is to take the stocks from your broker and import them right into the Profit Locker Pro app. So that's what it does, Carol. You don't link you take, whether it's TD Ameritrade, Interactive Brokers, blah, 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 you can enter your account information for your broker into the Profit Locker Pro. It will read that information and import those stocks that you're holding directly into the Profit Locker Pro, and that's what it does. And again, your broker doesn't see what your stops are. VectorVest will send you an alert to let you know when it's okay to close your trade. You just simply go to your broker and close out of the trade. All right, last two things. Patrick will be on Facebook tomorrow talking about the mobile app. I will be on Trending Thursday on YouTube at 2 o'clock tomorrow. And Joey does a great job, and you're right. I have to shout out to him. Thank you for all that you do. Thank you for my guests that are here. Patrick is just an aggressive freak when it comes to stocks. Todd is the slow. He's the turtle. Todd is the turtle
I'm still
of the three.
but I'm not as aggressive.
You know? And we love putting these on for you guys. Again, if you like what you saw today, hit the like button. Hit the like button. If you haven't already, subscribe to the channel. We do this once a month, every month, folks. So with that, adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Salam, shalom, namaste, yasu. Until the next time, folks, see ya.